Welcome back. My name is MrSchroeter, and I want to thank you for tuning into my channel. Please make sure that you subscribe to the channel. Hit that join button. Join the channel membership. Make sure that you are tuning into all of our uploads, the previous uploads that we've had, as well as our new uploads. Ring that notification bell. And don't forget to subscribe to our other channels, the MrSchroeter Show, which is my podcast, as well as the Credit Sensei, which is my other channel, where I'm giving you guys all types of tips on building your business and personal credit. The Cash Couple is another great channel that we have where you're going to get to see some behind the scenes action with myself and Crystal. And don't forget to go back and tune into some of my shorts where I give you guys some of my keys to success and some quick credit tips. Check out our playlist as well as our previous live streams. And with that being said, go ahead and sit back and prepare for the show. All right, welcome back, everyone. And today we're going to be talking about Navy Federal Credit Union and why some people are getting approved with lower scores and some people are getting approved with higher scores and vice versa. This is a topic that I've seen a lot lately and people have asked about. So I wanted to just go ahead and address it once on a video directly for my Navy Federal subscribers. I've talked about it on a few live streams, but I thought that it would be great to go ahead and directly address this issue. All right. So basically, I've talked about building your credit score and building not just your credit score, but building your credit profile. Okay. And the reason why I've been able to be so successful with getting people hundreds of thousands of dollars in funding through multiple institutions, not only Navy Federal, is because when I work with people, I do not just work with them on building up their credit score or changing their credit score, but rather I work with them on completing the package and creating a complete total profile. All right. So when we are talking about creating a complete total credit profile, what does that mean? That means we need to maximize our FICO score and be aware of what is on our credit report and how we can directly address what's on our credit score and turn it into something greater. So what does that mean? The first section we need to be looking at overall is our payment history. That is the largest portion of our credit score, and that's where the majority of our points come from. So if we want to come out on top and we want to see our credit score rise, the first thing we need to do is make sure that we're making on-time payments, and that if we have any late payments, we're trying to negotiate those payments off, or we want to have at least 10 positive payments to every one late payment. So let me repeat that. You want to have 10 positive payments to every one late payment. So whenever you're coming into a situation where you could potentially end up late on your credit cards, I always recommend that you figure out some type of way to pay it, whether it be taking a cash advance from somewhere else, rather it be borrowing the money from someone, but you do whatever you can do to keep your payment history as high as possible. The next thing that you want to make sure that you're addressing is your credit card utilization. Your utilization is probably the biggest swing factor in your credit report because it can and generally will change monthly if you're using your cards, and it's worth so much of your score. So 30% of your score is defined based upon how well you move your money around and how well you pay your bills. So that's going to cause you to see huge swings in your credit score. Now, of course, your next section is going to be your derogatory marks, which are your collections, your charge offs, anything that that's going to be derogatory that you haven't paid, they've closed out the account. Those types of things you want to dispute off of your report. If you're unable to dispute them off of your report, then you want to pay to delete or settle to delete them. And if the company will not delete them and you cannot get them removed, even with a specialist, your best thing to do is, if they are younger, go ahead and settle them out and get them to report a zero balance. If they are older, then you want to go ahead and let them fall off of your credit report, because they will fall off after 7 years. Now, the next factor, and probably the greatest factor, and probably what is one of the biggest factors that stops people from getting approvals, even with high credit scores, is, okay, yes, you have a prime credit score. Your credit scores in the 700s, mid 700s, whatever. And then you see someone in the 600s get approved and you're wondering why. Maybe their utilization's high this month. However, they have reported, for the past 5 years that they've paid their stuff. But on the other hand, you have a 3-month credit age because you're new to credit. And your credit age is going to greatly affect your ability to obtain credit, because banks are going to look at your credit age and see that as how well you manage your money over an extended period of time. And that's what they're mostly worried about, is getting paid back. So what's your payment history, and how long have you been paying people? How long can we bank on you paying people back? Because how am I going to give you a 5-year loan if I only know how well you pay people for the past 3 months? So that is a very big factor in this whole credit game, is your credit age. Now, lastly, how many accounts you have and how often you apply for credit. All right. So how many accounts you have, again, this is something that naturally comes with age. The longer you have credit, the more accounts you have, the better that you can show the bank that you can manage these accounts. And that's going to show the banks your responsibility and allow you to pull through. Now, how often you apply for credit is going to be a factor that weighs a lot less, but it will stop you if you're applying for credit rapidly and going for multiple applications at a time. As well as Navy Federal has a special system that they use to show how well you manage your money in Navy Federal. And that system is going to take your Navy Federal accounts and see how well you're managing your money with them, how many accounts you have open with them, how long you've been banking with them. It's called your internal score. They're going to take that and factor that in with your credit report to offer you a credit card or a loan. So with all of that being said, just be aware that there's a very long process that goes into that little 30-second approval, that you have to make sure that you build your credit report accordingly before you run into a bank and apply for something. Because if you don't have all of your ducks in a row, when you walk in there unprepared, there is the possibility that you will get approved. But if you walk in there with a strategy, you almost can be certain you're going to get approved, and you're going to get approved for a high limit. With that being said, thank you all for watching, and I'll see you guys in the next one.